MacDonald, and I am the Innovative Products Manager here at Evergreen Home Loans. I've been in the mortgage industry for just over 20 years, and I happily joined the Evergreen family back in October. My primary responsibility in my position is to take lead on this CashUp program. Today, I will provide a brief history of who Evergreen Home Loans are. I will jump right into CashUp by Evergreen and provide a high-level overview. I will discuss eligible home buyers and property types. I will discuss how to submit a CashUp offer. I will review what to expect during a CashUp transaction. We will conduct an interview between myself and Cathy Pizzini, who is a loan officer in Northern Idaho. And we'll finish with a Q&A session between myself and Tamara Rieger. Tamara Rieger is Chief Operating Officer here at Evergreen Home Loans. I like to refer to her as the Chief Architect of the CashUp program. Important to note, there is the chat function in Zoom that is enabled. So please feel free to submit questions as we go along. Tamara will do her best to stay on top of those questions and answer those questions as they come in. And she'll also strategically hold some of those questions back so that we can answer in that live Q&A at the very end of the presentation. Important to note that as we go along this presentation, a lot of the questions that you may initially have could very well be answered. Our marketing team, I think, has done a tremendous job of really tailoring this presentation to answer and address those questions that you as agents have. So Evergreen Home Loans is headquartered in Bellevue, Washington. We are a full service direct lender with more than 65 local offices, predominantly on the West Coast. As a former real estate agent, our president, Don Burton, founded Evergreen Home Loans in 1987 with this idea that his business would be one that delivered what was promised with no surprises. For over 3 decades, Evergreen has served neighborhoods with affordable home loan products while focusing exclusively on home lending and supporting our real estate agent partners. Because of Don Burton's background as a real estate agent, that's always been very important to him to make sure that as a mortgage provider, that we're really in tune with the real estate industry and with agents, and always looking to provide the most innovative products as possible. One of those products, of course, is this CashUp by Evergreen. So first and foremost, what is CashUp by Evergreen? CashUp by Evergreen is a unique program designed for home buyers who require a mortgage and need a more competitive offer to help them purchase a home. This program gives them the ability to make an all-cash offer and really level the playing field when competing against other cash offers or offers for more money. How it works. Your client or buyer is pre-approved as a cash buyer with Evergreen. They can then go out and make that cash offer with no financing or appraisal contingency. Important to note, if there is a pre-inspection or a seller-provided inspection, then that inspection contingency is waived as well. So they are really making an all-cash offer with absolutely zero contingencies. Evergreen will then buy the home on your buyer's behalf and then transfer it to your buyer after their permanent home loan is established. Eligible home buyers and property types. So home buyers who have the following minimum down payment without the need to sell an existing home. Owner occupied would be 10% down minimum. Second home would be 15% minimum, and investment property would be a 20% minimum. Conventional loan only up to the high balance limits. As of right now, no jumbo or government loans. I will say that we are working on a jumbo solution, and hopefully we'll have a solution here quickly. Debt to income ratio of 45% max, and a 700 minimum FICO score. This is where I like to throw in, we are looking at these very much on a case-by-case basis. The most important thing for Evergreen as a mortgage provider is we would need to be able to sell that loan asset to one of the agencies, so either Fannie Mae or Freddie Mac. With that said, the FICO score and DTI limits we have in place, those can be exceptions can be made, and so we'll look at that whole entire offer and the borrower to see if we can make an exception. We have made exceptions with FICO scores below 700, as well as DTIs above that 45% threshold. Property profile. So any occupancy type, primary residence, second home, and investment properties are eligible. 1 to 4 units. At this point in time, no condominiums or manufactured homes. Reason being, those property types can take longer to get to the closing table. And we're trying to make these deals go as quickly as possible. The property cannot be in distressed condition. So no properties that really need significant rehabilitation. Property must be located in one of 6 states: Washington, Oregon, California, Idaho, Arizona, or Nevada. All right, how to submit a CashUp offer. So again, the home buyer is fully underwritten and approved for the CashUp program ahead of time. They then go find that property, and then the Evergreen loan officer will complete what we call CashUp approval request form for that specific property. And the CashUp offer for that property is approved, and a certificate is provided to present with the offer. So we have a dedicated team here at Evergreen, and what we're doing is we're effectively looking at the property itself, again, to make sure it's not in distressed condition. We are looking at the borrower and looking at their financial picture to make sure they can afford that down payment. And then we're also looking at the offer itself, and we're kind of marrying those 3 things together to come up with that approval. All right, great news. The offer is accepted. What happens next? So you as the real estate agent will prepare the purchase and sale contract with the following: the buyer's name and or signs. There's an addendum that will read Evergreen Money Source Mortgage Company as nominee for the buyer's name and or signs. This addendum is what ties the purchase and sale agreement with your buyer's signature to Evergreen Home Loans. This is an all cash offer, again, no financing or appraisal contingency. As I previously mentioned, contingent only on a home inspection unless there's that pre-inspection or seller provided inspection in place. Important to note that home inspection is only for my eyes only. I'm looking at that, and again, I'm just making sure that the property is not in distressed condition. So I'm looking for any sort of major defects and or possible health safety related issues. For the most part, all the properties that we've looked at fit the bill. I mean, we're again, if this house is falling apart, obviously that's going to be a problem. But if it seems to be in relatively good shape, especially depending on the year the home was built, we understand there's going to be some things that are called out in inspection that we'll most likely be able to be fine with. You will designate a dedicated title company, which is dependent on state. So Stewart Title and Escrow in Arizona, California, or Washington properties, Fidelity National Title in the state of Oregon, Ticor Title in the state of Nevada, and Northern Idaho Title or Stewart Title in Idaho. This is an important piece. So, and this is where I know a lot of agents have questions about, well, why can't we use our preferred title and escrow company? Reason being is when Tamara ended up building out this product and this program, she quickly realized that there's a lot going on kind of behind the scenes, and we need to make sure this process is as streamlined and seamless for your buyer as possible. Also, Tamara went to great lengths to really vet the different companies and really go out of her way to kind of find out from our LOs and you, the agents, to figure out who are the most popular and well-respected with the best reputation, title companies and escrow companies in these areas. And along with that, there's definitely some negotiated fees that are involved too with the offering and with going with a dedicated title and escrow company. Minimum 2% earnest money from buyer is presented with the offer to be held at escrow, and we can close in as little as 10 days. So to sum up, all these bullet points, we have an offer that's all cash, can close in as little as 10 days. You as the agent get paid, your commission on that 10th day. You're giving your buyer a huge advantage. And we all know how competitive the markets are, and every market we lend in at Evergreen is crazy competitive. So by having this cash offer and by having Evergreen back your buyer, we're automatically putting your buyer in that top percentile as far as giving that competitive advantage of potentially winning that offer. All right, what to expect? So home inspection is required, again, to address any health or safety issues. Evergreen is the buyer and will close with cash on that purchase and sale agreement contract expiration date. The borrower financing occurs after Evergreen closes on the property. Evergreen will order an appraisal. However, it's for the borrower's financing after the cash sale closes. So once that offer goes into mutual acceptance, we'll typically want to get that home appraised as quickly as possible. Again, that appraisal is not used for the cash close. We are going to, if we presented that certificate as proof of funds, we are going to buy that home with cash, no matter what that appraisal says. Again, that appraisal is just for that subsequent loan closing. If the appraisal comes in lower than the purchase amount, the transaction will still close. And a little bit further in the deck, I'll go over what happens in the rare situation that the appraisal does come in low. What fees to expect? So a very important question. So there is a flat $1,950 administration fee for borrowers to use this program. Title and escrow and property transfer fees range from $2,000 to about $5,000. And this range is dependent on a variety of factors. So please contact your Evergreen loan officer to get a real detailed, customized scenario. A big reason for that range difference is just the states. The title and escrow companies have different fees in different states. Some title escrow companies in some states, we were able to negotiate the fees more so than other states. Last bullet, there's no excise tax on the transfer. And this is, again, another reason why we use dedicated title and escrow companies that know how our program works. So we're effectively able to work around that and be able to, we were able to admit that excise tax on that transfer from Evergreen to your buyer. Rent back. So prior to Evergreen purchasing the home with cash, the buyer's agent will procure and fill out the rental agreement to be co-signed by both the buyer and Evergreen. Rent back after cash closing is a requirement. So even if the borrower does not intend to occupy the property, they will still be subject to a rent back charge. This is a per day charge that will be assessed at the time of loan closing. That calculation is the sales price minus earnest money times 4%, which is about the Evergreen's cost of funds percentage. And then that's divided by 360 days. The rent back agreement and charge will terminate as soon as that permanent financing is established. And the real estate agent will turn over the keys after cash close or hold keys in the key box until that loan closes. So great news for your buyer. If they really need a place to live, we can make the offer can be accepted. We can close in as little as 10 days. And on that 10th day, you can hand your very happy borrowers keys to their new home. So some what if scenarios. So what if my client loses their job or no longer qualifies for financing? In that situation, we have that 2% earnest money in place. That 2% earnest money is to offset the costs that Evergreen will incur when we have to then go out and list the property again for sale and go through that whole process. What if my client needs to sell their home first? At this point in time, we need those assets, your buyer's assets in place in order to afford that down payment and earnest money. So we cannot offer CashUp along with a transaction where we're contingent on your buyer needing to sell their departing residence. This is a good opportunity for me to say we're working on a solution to this, and the solution is coming quickly. I'd say within the next month, month and a half, we should have a solution in place for this. So please be sure to check back in with us here soon. What if my client backs out or wants to use a different lender? much like that first bullet point, we would, in that situation, we would end up keeping that 2% earnest money. And what if the listing agent wants to use a different title and escrow company? Hopefully I hammered this home enough. We really do need to use our dedicated title and escrow companies that vary by region. And just to give a quick story, we did go, what I say, we went rogue with another title escrow company on one of these transactions, and it ended up being very confusing, just because that title escrow company did not fully understand what we were trying to do, and that pushed some dates out. And the fees were also a little bit higher than what we advertise. So again, very important to stick with our dedicated title escrow partners. All right, as I mentioned previously, I was going to discuss what happens in the event of a low appraisal. So we have 3 steps that would occur. First is the borrower has enough in liquid assets to pay the difference between the purchase price and the appraised value. Second is we can increase the LTV on that permanent financing to cover. So by exception, we can go above the 90% maximum LTV. Again, at the end of this transaction, our goal as a mortgage lender is to sell that loan to an investor. And so Fannie Mae, Freddie Mac, they allow us to go all the way up to 97% LTV. So we do have cushion in there to increase that loan to value. And when we're reviewing that borrower's financial picture, we're also looking for at least a little bit of buffer just in case that appraisal does come in low. They'd have maybe a little bit extra in assets to potentially throw at the closing table to bridge that gap. And then third is a combination of the 2 above. Maybe your buyer ends up bringing at least some money to the closing table, and then we also increase the LTV. So a combination of the 2. All right. Next up, we have an interview with Cathy Pizzini. Cathy is a senior lending manager and part of Team Evergreen with Evergreen Home Loans. She's a long-standing member of President's Club with honors, and always she's been one of the top performers for years and years and years. She currently serves Northern Idaho, Washington, California, Oregon, Arizona, and Montana markets. She lives in Sandpoint in Northern Idaho with her husband and 2 adorable Siamese cats. I have not seen these cats yet, so I cannot confirm. When she isn't working alone, Cathy enjoys spending time in her wood shop, perfecting her woodworking skills and crafting her next home project. I will say, in working with Cathy, she takes it upon herself to become a subject matter expert at seemingly at whatever she puts her mind to. And I know she's really taken it upon herself to understand this CashUp program and to really go out and market it pretty much throughout the whole entire region of Northern Idaho. I don't know, maybe we can have her go on a road show and then hit up all the other states that she serves. Welcome, Cathy.
Thanks, Ken. Happy to be here.
So let's jump right into questions. So first and foremost, what are some questions you hear from your agent partners, Cathy?
I think that the biggest thing that comes out initially when we start talking about this program is, why are you doing this? Because it seems so unusual for a lender to step up and do what we're doing. And so the thing that I always try to cover first when I'm at a presentation in an office or talking to a buyer, either way, is to explain the why. And there's 2 things. First, I think, Ken, you hit on it earlier about Don Burton, the owner of the company. He started as a realtor. He gets realtors. His whole focus was to make sure that everything that we do at Evergreen is realtor centric, because if we take care of you guys, then you'll take care of us. So that's the reason why the program was developed. And then the other reason is we want the end financing. That's the reason we're doing it. And we were finding we were approving all of these buyers and they kept getting beat out on their offers. So as opposed to just being frustrated with the whole concept, Don and Tamara and Ken and all those guys got together and said, hey, what can we do to solve this? So I try to start with both realtors and with buyers to say, here's the reason why. We want your loan. And we want it ongoing, into perpetuity. And that's why we're doing it.
Perfect. Absolutely. I mean, talk about like a mutual, I guess, a mutual benefit between both the agent and us as the mortgage lender, right? We're trying to get our borrower into a home, and of course that perfectly serves the needs of our agent partners as well.
Yep.
All right. And what do you think, Cathy, is the biggest benefit of the program for your agent partners and clients?
Well, I think this is going to sound stupidly basic, but as a realtor, where do you get your referrals? You get referrals from happy clients. And so do we, right? So if you're getting Billy and Sally into the home of their dreams, they're going to love you. And then once they love you, then they're going to turn you on to all of their friends and etc. So to me, the biggest benefit that this brings you is a happy client. And you guys all know that buyers that keep getting beat out and beat out and beat out, pretty soon, in some cases, they blame you, which is not your fault, because there's so many buyers out there. But let's make a happy client out of them. And that's, to me, the biggest benefit, because then you get more referrals.
Absolutely. As we all know, and I've discussed this already, we are experiencing a highly competitive market due to, in large part, to low inventory. Do you see this program as a game changer for agents and customers?
Well, yes, but you got to get it. And you got to understand what you have in your hand. To me, Evergreen has for a very long time had a program called Security Plus Loan Guarantee. And what that was, it was a step above that pre-approval letter that lenders provided. And what we do is we take the buyer all the way through the process. We get pay stubs, bank statements, W-2s, tax returns, credit letters, the whole 9 yards. We submit it into underwriting. And at that point, you have a completely underwritten file. And the reason I bring this up is that some realtors really grabbed hold of that program, because what it did is it set their offer above the next guy, because what we had is a completely approved buyer that Evergreen guaranteed. And that guarantee was to the seller that the buyer is 100% approved, subject only to appraisal and title. And if we fail to get the loan done for any reason other than those two items, we will pay the seller $5,000. So realtors that understood the power of that Security Plus made it really work for them and had super success with it. But if you don't grab hold of what you really have in your hands, you don't necessarily, it's not going to be necessarily a game changer. So for me, talking to the realtors, once we get these people Security Plus approved, which means, which Ken talked about initially, which is they're all the way through underwriting, we're 100% satisfied with, we'll get their loan done. That's the baseline. And then what you do is you say, as the realtor, you position this to say, you've got a proof of funds letter from a bank saying they're going to buy this house in 10 days for cash. That's pretty darn strong. That's stronger than another cash buyer who has their own funds, right? Because we're not 100%. We can really pull those out and what the penalties were and all that stuff. You got 100% deal right in your hand. And so it's very strong. So if you really understand the program and know how to sell it to the other agent and to the seller, then yes, I believe it is a game changer. And that is something also that your lender that you work with, the Evergreen representative, they should be reaching out, which I've done, to the listing agent, explaining the program to the listing agent so that they completely understand it, so that they can present it to the seller. So I think, yes, it is a game changer, but jump on it, internalize it, understand what you truly have, because it can be a very powerful tool.
Great, thank you, Cathy. Last question. Any advice on how real estate agents can get started with the CashUp program?
Yeah, just do one. You kind of have to jump in. And so it's not that hard, truly. These guys have made it super simple. Ken's great to work with. And I will say that the one that I started with, the first one that I did, we had a buyer who was going to be a contingent offer on the sale of their home. We were able to get them completely approved, and through the process, it's a very simple process for the realtor. You just have to follow the directions that your Evergreen loan officer gives you, because it's all laid out. We have all the forms. It's just not that big of a deal for a realtor, and you guys get paid in 10 days. I mean, you can be done with it in 10 days. Your buyer's happy. They can move into the house. We'll do all the back stuff later, but just do one. It's really been a super fun program.
Love it. Well, thank you so much, Cathy, and look forward to approving many more cash deals here in the near future for you.
Yep. Thank you, Ken.
All right. Bye-bye. All right. Jumping into Q&A. Again, Tamara Rieger and I will address some of the questions that you guys have submitted via the chat function. I imagine Tamara has probably been answering some of those questions as the presentation has gone along. Again, Tamara Rieger is our Chief Operating Officer here at Evergreen, and she is my go-to for any and all questions CashUp, and she's obviously still very involved with the program, especially as we move forward to continue to push the envelope on innovation as it comes to this program. So welcome, Tamara.
Thank you. Terrific job, Ken. This session that we've had, we really have not had as many Q&A from the audience that we have in the past, but no worries. I actually have Q&A to provide you, Ken, from our last session.
Okay.
We received a lot of great questions from the real estate agents in our call from 2 weeks ago. So Ken, can you share with us what is your turn time during the week and during the weekend?
Yeah, absolutely. So I will share that we have a posted turn time of 2 hours, and that's kind of an internal posted turn time. We definitely went to the very max of that turn time. We do have another employee who joined us at the beginning of this week, and I have no doubt he's going to really hit the ground running and add a lot of firepower to just the service levels of the desk. So I would say that we can typically turn around those approval requests in less than a half an hour. And I think that's going to be a good kind of benchmark for us to have, where as soon as we get an offer request in, I should say an approval request in from the LO, I want to be able to get on that as quickly as possible. Again, growing out the department means we'll have more bandwidth to really streamline process and procedure. And I'd love to get that even quicker. I mean, get it down to 15 minutes, and I have had situations, especially on weekends, it seems like on a Saturday morning where at 11 o'clock, we have a LO say, hey, sorry to do this, but we have an offer that's offer reviews happening in an hour. Can you guys get on this, and we'll turn it around. It's our goal obviously is to support you as the agent, and that support includes being extremely timely in this very competitive market.
Great, thanks, Ken. And I do have a Q&A that came in from the chat, and there's several questions in here, so I'll break it down. Is the close 10 business days or 10 calendar days?
Yeah, and so correct me if I'm wrong, Tamara, it's 10 calendar days, right? Yeah, so 10 calendar days. Yeah, it's very quick. We have closed some in 10 days. I think that's a question I also get. It's like, okay, so you advertise 10 days. Can you actually close on a home purchase in 10 days? And yes, we can. And we have, I think we've had at least a couple. On average, it's typically about 12 or 13 days, but yes, we can close in 10 calendar days.
The second part of this question, there's actually 4 questions in one. So, what if the appraisal does not happen within the closing time frame? So for example, I mean, we expect, and I think you had the same materials, but we expect that the appraisal is likely going to come in after the cash close.
Mm-hmm.
Do you want to just explain a little bit about how we treat the appraisal?
Yeah, absolutely. So again, we can close in as little as 10 days on the cash close. If we order that appraisal on that first day or second day of mutual acceptance, then the hope is to get that appraiser in the door as quickly as possible. We fully realize that in some regions, it's those appraisal turn times are slower than other regions. So that loan will then be locked for that borrower, and will very much taking into consideration how long that appraisal, we expect that appraisal to be returned. So in that sense, we've locked in a loan, and it's at that point in time, the home has been purchased by Evergreen. We're holding onto that home, just waiting for that appraisal to come in so we can button up everything we need to on the loan to pass off that permanent financing to the borrower. That's where that rent back that I discussed, that your buyer can certainly be living and occupying that property as they wait for their home financing to close. But we'll just kind of be in a little bit of a waiting pattern to get to that loan close date.
Great. And then another question was the borrower's title and escrow fees. Are those just standard title and escrow fees?
Yeah, exactly. So when Evergreen buys the home with cash, Evergreen's going to incur some title and fee costs. So that includes just standard title and escrow fees, recording fee, and then when we go to the loan close, the buyer, who's now our borrower, will end up paying those fees that we incurred on that cash close, in addition to have standard loan closing fees that they would have, whether they used a CashUp cash offer program or not.
Great. And so now I have a question on rent back. I know you had I think in here you had a slide on the calculation,
Mm-hmm.
but what is the average cost of the rent back provisions with the borrower?
Great question. So an example I typically use is on a $500,000 sales price. You have 10% down. So that brings that sales, or I guess I should say, 2% down for the earnest money. So you have sales price minus earnest money. So 500,000 minus $10,000 is $490,000 times 4%, divide by 360. I believe that arrives at around $54, $56, something like that. The main piece is this is an interest only charge, and this is the cost of Evergreen to carry that home through loan closing. It's very inexpensive. It's going to be less expensive than their actual mortgage payment. So it's very, I think, cost friendly.
Great. And then with regards to their permanent financing, when we close the loan, what type of fees? Do they have origination fees, or what type of costs are associated with their permanent loan?
Great question. And the simple answer is no additional fees. We really are treating your buyer, who's now our borrower, just like they're getting any loan. It's almost like you can remove the fact that they were a CashUp borrower to begin with. There's not a quarter or half a point add to rate. There's no additional discount points that we're charging, your buyer. They essentially become a borrower of Evergreen's, and we put them in traditional mortgage financing with no added, fees, no surprise fees, no junk fees, nothing like that.
Ken, question, what if the realtor is also the buyer? I personally had one where a buyer was representing themselves. Mm-hmm. And I know in my situation, we really need them to be an experienced agent. Mm-hmm. When representing themselves. But I'm not sure if you've seen anything, Ken. Have you had any buyers who are also the real estate agent? Was it any different?
No, I don't think I've seen that before. But yeah, I mean, I think if anything, it'd be just communication is critical with this program. I think Cathy touched on the fact that it's a fairly straightforward process for the realtor. A lot of the legwork is done kind of behind the scenes at Evergreen. It kind of reminds me of that whole, the duck paddling in the water, where the duck looks very, very calm, cool, collected, but his feet are going super fast. That's what we're doing on our side, just making sure timelines are adhered to, and working with title and escrow, because our reputation's on the line. We want to make this as smooth of a process as possible. So if anything, I love the fact that we would potentially have an agent who's also the buyer, because what a strong testimonial that would be. Figuring that they'd have a very smooth and successful process, and really be able to look back on the situation and say, hey, because of Evergreen's all cash offer, I was able to get into this home and beat out all these other offers.
So another question is around home inspection. So we know a home inspection is required. What are you seeing with the home inspections? Are you able to accept an inspection from the seller? How do you kind of vet that it's not someone related to the seller, like the seller's uncle's doing the home inspection?
Sure.
I'm not sure what you're seeing with home inspections right now.
Yeah, I mean, that's definitely, there's a lot of due diligence that goes into both, receiving the inspection and reviewing that inspection, especially since, no financing contingency, no appraisal contingency. Pretty much all we have is to look at this inspection, just as far as the property is concerned. So yes, we do make sure that, who did provide the inspection is a reputable company. And then in looking at that inspection, again, looking for anything that really stands out. I've quickly learned that these inspections come in all sorts of shapes, colors, and sizes. There's, a lot of times red font is used to call out major defects. Some inspections have really good detailed summary sections, some do not. But I'm pretty much just perusing through that inspection just to look for, again, major defects, health and safety issues. And if I find anything that looks potentially suspect, then that's when I get in touch with you as the agent, to kind of, talk through it. Hey, it looks like there's a leak in the roof. How serious is this leak? And it's important to note, we as Evergreen are a mortgage company. We are not a real estate company. And I think, Tamara, you've done a great job of making sure that we kind of have separation of duties, where we really lean on you as the agent, to work with the seller's agent or vice versa, on these transactions. So I just want to throw that in there. If there are things that are found on the inspection and on the subsequent appraisal that need to be addressed, Evergreen's going to step back. We're going to say, okay, you guys can talk this out, whether there needs to be some updates made to the property, if there's going to be any sort of negotiation that's going to be needed, if there's going to be a seller credit. We really leave that in the realm of that kind of real estate process.
So this one is a tricky one. This one's tough for me. I did try to answer it in the chat, but we know when we close with cash, our borrower can occupy right after closing and do a rent back. But what if the seller, the original seller on the property, wants to remain in the home and do a rent back?
Absolutely. And we've seen a situation, just to give some numbers, we've closed, I think we're getting close to 30 transactions closed now, with the majority of them being closed in calendar year 2022. So real quick, we made some improvements, some significant improvements to the cost of the program at the end of 2021, which I think is a big reason why this is really taking off. So to that question, first and foremost, yes, the seller is allowed to rent back the property. This perfectly kind of goes off of what I just mentioned, where we at Evergreen, as the mortgage lender, are going to really kind of step back from that real estate transaction. That rent back, we will still issue that and charge the buyer for that rent back, even though the buyer is not the one going to be occupying the property, obviously. So that's going to be a negotiation between buyer's agent, seller's agent, where they'll, work something out that states, hey, listen, this is the cost to rent back, and the seller is going to reimburse, our borrower, your buyer, for that rent back fee. But yes, have certainly seen that. And again, in this competitive market, if the seller says, hey, I want to live here for another 30 days, I'm pretty sure that's not going to be a deal breaker. And so that's why I think we see that quite often.
Great. So next question, if the buyers take the first step to the CashUp program, so they're ready to go, which we know the way it works in our office is they are submitted for Security Plus. We fully underwrite the loan. So we know they're ready for CashUp. But what happens if they don't want to use the CashUp and they just go traditional financing for whatever reason? Is that okay?
Absolutely.
That they're not going to use the cash, make the cash offer?
Absolutely. That's okay. And that's the great thing about the Security Plus pre-underwrite is it's a rock solid pre-underwrite. We have a seller guarantee in there where we pay money to the seller if something were to go sideways. So it's very much I would say a guarantee of underwriting approval. So and that's where every situation's different, and but yeah, if your buyer decides that they don't need, and you as the buyer's agent decide that you don't need to lean on an all cash offer, and maybe somehow there's not much competition and there's not many bidders, then yeah, maybe you can pull out of the using all cash and just close with traditional financing and kind of bypass that cash close. As Cathy mentioned, our goal here is to get that mortgage loan. That's what we want, and we want to take care of your buyer to the best of our abilities and have future business with that borrower. So whatever makes most sense for that borrower is the path that we're gonna want to go. On the flip side to that question, we've had situations where borrowers pre-approved with Security Plus, and maybe they've lost out on a couple offers, and then seemingly at the last minute, they all of a sudden want to use an all cash offer. And that's fine as well. And that's where we have that very quick turnaround on that approval process to issue that proof of funds guarantee certificate that, yes, this is an all cash offer backed by Evergreen Home Loans. So I think we've probably seen both those situations play out, certainly.
Great. So this is a question on fees. And so I don't know if it's more of a statement or a question, but there are double escrow fees. Maybe you can explain on the cash close, we do have an escrow fee. When the loan closes, there is an escrow fee. And the part of the question is, do you get a binder of title insurance? So the title insurance doesn't have to be paid twice. So the second part of this is probably explaining how we obtain a hold open owner's policy. You can go through that.
Yeah, absolutely. And again, this comes down to our relationships with our dedicated title and escrow companies, where we went to great lengths to make sure that we could keep this program as cost effective for your buyers possible. We're a realist here at Evergreen. If we have to charge a lot of money to partake in this program, we knew that would be a big deterrent. This is a good opportunity for me to talk about. Please go out and if you so choose, look at other cash offer type companies. I don't think you're going to find a company that has as inexpensive as what we charge here at Evergreen. And so part of that cost effectiveness is that what we call hold open policy. And that's where we open up title and escrow on what they refer to as the A file, which is the cash close file. And then we're able to carry over that policy to the close of the B file, which is the loan close. And so that's a discounted fee in order to keep that binder open, which again translates to cost savings for your buyer.
Now, this is a good question. Are there any agents that have closed with this program that we could contact to run through the process with? Knowing we've closed about 30 of these transactions, we probably have 30 buyers agents and 30 sellers agents. I would imagine we have around 60 agents that have experience with the process. Do you have a suggestion on maybe they reach out to our Evergreen loan officer to start? And we could assist with maybe agents that they could talk to?
Absolutely. No, and that's a great question. And I think there's nothing more powerful than an endorsement from an actual agent who's used the program and has found success in the program. I can say that we have plenty of agents who are very, very excited about this program. And it seems like once they really sink their teeth into using the program, then it's almost like they just want to keep using it. I'd definitely start with talking to a loan officer. I'm not in a position right now to just start handing out, real estate agent names and phone numbers. I don't know if they'd appreciate that. But with that said, that's a good takeaway for me, where I can go back to some of the agents on these deals and see if they'd be willing to share their contact information to be contacted to promote this program. I will say, and again, Cathy touched on this, like once you get to know this program and see how easy it is and see how effective it is, like it's just almost a no-brainer to me that that you should partner with this program. I mean, put it this way, and I'm going to use the Puget Sound area as an example where we have high cost limits. I mean, at a final loan amount of $891,250, you can have your buyer for the $1,950 admin fee plus about $2,000-$2,500 in title escrow fees. So all in, we're about $4,000 to $4,500. They're getting to submit an all cash offer that can close in 10 days with no contingencies. I mean, that's so powerful. And one thing I like to bring up is if you've had a buyer who has lost out on multiple offers, say 2, 3, 4, 5 offers, and you could ask them, hey, if you could go back in time and go to that first house that you were so in love with and emotionally attached to that you wanted to win, if you could pay $4,000 to $4,500 and get that house, would you do it? And I think it's just a no-brainer. It's of course I'd part ways with it. I mean, it's a small chunk of change on the overall cost of the home, especially in this market when buyers are willing to escalate tens of twenties of thousands of dollars above asking price. If you could just go back in time and use this program, you would have increased the odds of winning the property, tenfold. So sorry, went on a tangent there.
There was another question I did answer in the chat, and that was, is there a brochure that we can give the buyer or the agent to just explain the program? So I answered in the chat about our ebook.
Mm-hmm.
And so we do have a nice, I don't know how many pages it is. I think it might be 3.
Mm-hmm.
But there's a nice electronic brochure. And if you reach out to your Evergreen loan officer, they can provide you with the ebook, which is the electronic brochure that explains the process in some very simple step-by-step, and also covers fees. We give an example of the calculator, so it shows fees, and this we use for the realtor or the buyer.
Yep, absolutely. And in addition, this is where I think our marketing team is amazing, and we've created all sorts of one-page brochures as well and flyers. Both directed to the buyer, directed towards the buyer's agent, directed towards the selling agent. It's our goal here with these presentations is to get in front of as many of you agents as possible, and both on the buying agent and the selling agent. Yes, we have plenty of marketing material that I think is very sharp. And again, reach out to your loan officer, and I'm sure they'll happily provide you with some of that marketing information.
Yeah, and I know our loan officers are going into the agents' offices and doing presentations and lunch and learn. I know after our last call, I joined an agent presentation for the entire office. Ken, I know you do quite a few.
Mm-hmm.
But if there's realtors on the line on the call here, I know Ken, maybe you want to elaborate, but I know our loan officers are willing to come in and do a presentation for the office as well.
Completely. No, that's one of my favorite things to do. To be able to, really drill down into a specific real estate office. And, what I like to do is kind of get some questions beforehand that you have as an office. and then really assist that loan officer with presenting and going into the, maybe even more details than we provide in this session, and really concentrate on your market, to the point where we'll tailor a presentation deck that's very specific to your region and to what you're looking for. As an example, I partnered with a LO down in Oregon, and it was a real estate office that, for whatever reason, they've really specialized in investment properties. And so they wanted the presentation to really touch on, how will this work for borrowers who are looking to buy investment properties, and so that's just an example of how we can really kind of get granular and customize the presentation. But more than happy to jump on Zoom calls if it's local in the Puget Sound, to go meet in person as well. So please feel free and do not hesitate to reach out if you want further information or further presentation.
Great. We had a few more questions came in, but I did answer them in the chat, but we can elaborate on them. I know in your presentation, Ken, you said that there's no contingencies, but I know you meant there's no financing or appraisal contingency.
Mm-hmm.
The only contingency is the home inspection.
Mm-hmm.
And so I clarified that in the chat.
Mm-hmm.
And then the other question was around, the program is set up so that we have 10% down. So we are approving the borrower at a 90% loan to value if it is a primary residence. Now, what happens, let's say the appraisal comes in at value. We've already closed with cash, but now we're going to close their loan. And can they go higher on the loan to value if they want?
Yeah, I mean, so again, we have those thresholds in place as a starting point. This is the way I think about it, and that starting point is really to protect Evergreen. We're going out on a limb to say, hey, we're gonna buy your buyer's house for them, and so there's inherent risks in that. So with that said, if then it comes time to do the financing, and our borrower does wish to potentially increase that LTV, again, as long as that loan is saleable to Fannie Mae and Freddie Mac, that's certainly an option.
Great. Well, we have successfully answered all of the questions that came in to the Q&A. So Ken, I'll turn it back to you to close out our presentation today. Great.
Thank you so much, Tamara, as always. All right, so hopefully you're ready to get started. As we've mentioned, be sure to contact your local Evergreen loan officer. And if you're not currently working with an Evergreen loan officer, you can email us at cashup@evergreenhomeloans.com, include your name and your zip code, and then we'll go ahead and match you up with a loan officer in your area. And we will do our best to find a loan officer who has experience with the CashUp program. So please feel free to reach out to us, to loan officer, and really let us help you succeed with this program. We really believe in this program, and the numbers don't lie. It's taking off like a rocket ship right now. So thank you so much for joining us this morning, and have a great rest of your day, and a great weekend that's coming up. So thank you so much, everyone. Bye-bye.